The Reserve Bank board's increased the cash rate by 25 basis points to 35 basis points. So that's quite a surprise. As we were saying earlier, it was looking like it was going to be 15 basis points, but they've supersized that, taking the cash rate to 0.35% or 35 basis points. So just looking at some of the early comments, the board has judged that now is the right time to begin withdrawing some of the extraordinary monetary support that was put in place to help Australia's economy during the pandemic. The economy has proven to be resilient and inflation's picked up more quickly, perhaps an understatement, to a higher level than it was expected. But also a key line here that wages growth is picking up. And so the RBA Governor Philip Lowe is saying that given this and the very low interest rate, it appears time and appropriate to start the process of normalising monetary policy conditions. So a bit of a surprise there, not a surprise that they've risen rates, but the level that they've taken rates to, 35 basis points up, 0.25%.
And there's a media conference from the Reserve Bank, I believe, at 4 p.m. Eastern this afternoon. It's pretty unusual for them to do that, isn't it?
They've done it a couple of times. There was a press conference that Philip Lowe did last year when he started easing some of the monetary policy support. And then, going back to March 2020, when the pandemic hit and the interest rate cutting began in quite a dramatic fashion, Philip Lowe held a press conference there. So it is unusual. It's very good just to see the Reserve Bank communicating much more, but clearly Philip Lowe has some important questions to answer and to put today's rate rise decision into context and to explain the reasoning behind it.
Okay, let's go to our business editor in Verrender in the studio now. So interest rates now at 0.35%. You surprised?
I am, because it's an unusual number for the Reserve Bank to settle upon, because normally they move in increments of 0.25%, and so they like that 0.25, 0.5, 0.75, 1. So to end up at 0.35 would suggest at some stage they'll have a 15 basis point hike or reduction, depending on what happens. I mean, the Reserve Bank of Australia is very slow off the mark to be hiking rates. In New Zealand, rates are well above 1% at the moment, and we've seen 4 hikes in New Zealand already. We've seen them in Canada, the UK, the US. It is, so we are really, really very slow off the mark here. But it is a surprise to see them do that kind of level of hike.
It'll surprise the markets as well.
Yeah, I'd say so. We're likely to see a much stronger Australian dollar, and probably the stock market take a bit of a hit this afternoon.
Where will things go from here then? Let's talk about June.
Yeah, well, the thinking is that there will be another rate hike in June, and all the talk was that the Reserve, this is up until about Monday last week, all the talk was the Reserve Bank will not interfere in the political process, won't interfere during an election campaign, but not taking an action is an action in itself. So to not move today could have been considered to be political interference as well, by supporting the government not hiking rates when they should have done in the middle of an election campaign.
Yeah. You're not wrong about the reaction from the Australian dollar. It's at 1.3%, and the ASX stock market is down 0.5%. Let's bring in our senior economist at ANZ now, Felicity Emmett. Felicity, your thoughts?
Surprising that they went for slightly larger rate rise than we expected, but also bringing the cash rate up to that 0.35, which is unusual for them. It means that to get it back to those sort of 0.25, 0.5, they're either going to have to do a 15 or a 40 basis point rate hike at some point. But I think what it does show is how concerned the RBA is around what's happening with inflation. They note in their statement that some of this is obviously coming from offshore and some of the overlapping supply disruptions that we've had, but also now that they really are starting to see in their own liaison with businesses that we are getting wages pressures coming from when people are moving jobs or as businesses try to retain staff, and that is coming through and sort of feeding into what was initially a supply chain issue. And they are obviously, I think, concerned about what inflation is doing and the momentum behind it at the moment.